Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Looking at the US, a pause in the oil price slide allowed markets to start the week well with a small rally in all indices. The US 500 added 14 points to close on 2026 spot 23. The US Tech 100 added 38 points to close on 4,580 spot 50. And the Wall Street gained 124 points to close on 17,395. Looking at commodities, gold declined as oil came to a halt and equities moved upwards. The precious metal dropped $10.60 to close on $1,061.50. Brent crude lost all of 19 cents to close on $37.70 a barrel. Despite the small move in oil, the commodity slipped to a new 7-year low in Asian trading on Tuesday after a Monday drop that took it close to levels hit during the financial crisis, amid increased expectations of persistent global oversupply. The renewed pressure on the oil price comes amid widespread expectations that the US Federal Reserve will on Wednesday raise rates for the first time in nearly a decade. Cheaper energy costs are a boom for consumers and the broader economy. However, the prolonged slide in oil is hurting highly indebted US shale drillers and the banks that lend to them. With much of the junk bonds energy sector currently in distress, a strong dollar and money managers re-establishing their short positions were piling on the pressure. Hedge funds continued to add to their record bearish positions last week, accumulating short positions in the main WTI and Brent futures and options contracts to the equivalent of more than 360 million barrels. Not only is oil suffering from a slump, but miners are being affected as well. Iron ore's 45% retreat this year has left the industry on the precipice of an unprecedented shakeout as higher cost suppliers are slowly forced to exit the market. Prices are continuing to fall as the largest companies, including Vale SA, Rio Tinto and BH Billiton, expand production and grab market share. Iron ore fell below $39 a metric ton last week, a record low in daily prices dating back to 2009. That's down from near $190 in 2011 when Chinese demand was booming. The slump has hurt miners' shares. Rio Tinto has lost 28% in Sydney this year, dropping to 40.39 Australian dollars on December 9th, the lowest price since 2009, while BHP has fallen 40%, and in Brazil, Vale has dropped 49%. Looking to Europe, the Germany 30 closed just 5 points higher than the open on 10,315 spot 4. However, was subject to an extremely volatile day trading. The index had a low of 10,120 and a peak of 10,446 yesterday. The UK 100 had a similar reaction to the markets, adding 15 points to close on 5,961 spot 2, however ranging in a 150-point movement. In today's corporate news, Aviva has announced its termination of talks with Schneider Electric. In its pre-close trading update, Petrofac said its portfolio had performed in line with expectations. Cobham has completed the divestment of its metallics business to MACOM Technology Solutions for $38 million. And construction company Galliford has been appointed 2 new contracts in the education sector with a combined value of £85 million. Today's economic data in focus at 9:30 a.m. the UK Consumer Price Index and Producer Price Index is released. At 10 a.m. the Eurozone Economic Sentiment Survey is released along with the employment change, and at 12 p.m. the UK Bank of England Quarterly Bulletin is released. That's all for this morning's market update. Thank you and goodbye.